Hello and welcome to our daily catch-up. And an interesting story which I covered for 2GB and Ben Fordham this morning was around our top brand companies. Now, I think it's a very interesting story in its own right, but I also think there's a very valuable investment tip in this story. Let's just do a recap. Brand Finance Australia tells us that our top 100 brands, top 100 companies rose by 15% to $194 billion. Now we have top 100 companies on the stock market, but they're not necessarily the top 100 brands. So this is a separate group, but there would be a lot of overlap between those top 100 listed companies and the top 100 brand companies. Woolworths is number one for the fourth year in a row. Its brand value rose 18% to $16.2 billion. Its competitor Coles came in fourth with a 10% increase to $10.9 billion. Telstra went up to second, rose 29%, primarily because Optus went down because of all those security problems that Optus had. CommBank, its decline has stopped. It's reversed it. It's now coming in third place, up about 28% to $11.4 billion. NAB, 36% jump to $7.9 billion. It takes out number 5. Now, what I find really interesting is to look at how these really good branded companies have done on the stock market. And I've done a bit of homework here. Let me read it out to you. So let's look at it on a 5-year basis first of all. Woolworths was up 51%. Telstra was up 14%. CBA was up 34%. These are the share prices of these great branded companies. Coles up 34% and NAB up 14%. An average rise there of something like 29%. At the same time, the market was up about 23%. So you can see there's a really good reason to look at the quality of a company and its brand when it comes to investing. Now, I took it to the max now, about a 25-year period. Woolworths was up, now wait for it, 637% over that period of time. Telstra, remember, it had a shocker in its early days. It was actually down 47%. CBA up, wait for it, 366%. Coles didn't exist 25 years ago. It did, but not as a listed company. It was in a different vehicle. And NAB was up 26%. NAB has had highs and lows, but it's still up. What's intriguing is if you'd gone for Telstra, one quality company, you would have lost over a 25-year period 47%. But if you'd mixed them up, had 5, and I always say if you're going to invest, have at least 10, possibly 20 companies, and that means you're not exposed to any one bad CEO or any one bad government policy decision that can really hurt the profitability and the share prices of companies. What's interesting then is that the average rise of those companies over that period of time, the 5 I was talking about, which really was only 4 because Coles didn't exist for that 25-year period, was an average of 245%. The market itself was up about a lot less than that. The details we've got here only goes back to 2006 for the overall market, and the rise there was only 47%. I think it would be bigger. But the bottom line lesson is, if you're going to invest in companies, really think about the quality of the brand name, and the best time to buy quality companies is when the stock market goes for a really big crash and everything's being sold off, and that's the time you really should think about putting some money into great quality brands, not just one, a group of them, and generally history tells you you'll do pretty well. That's the lesson for today. Thanks for joining me. Talk to you tomorrow.